and we are live on Facebook. So thank you, audience, for joining us.
Hello.
Welcome to Credit and Real Estate Today. My great friend,
Abigail Bridgeford, yes.
From
Genuine Property Solutions Real Estate. Looking forward to being able to give you some great information today.
Yep, and you know me, I'm Kevin Lewis, the Credit Crusher. Premisien is the name of the company. Today we're going to be talking about credit. We're going to be talking about real estate, maybe not in that order, but we've got some exciting and informative information for you. So stay tuned. Abby, I'm going to let you start off.
Thank you.
And I'll go take a seat and I'll come back up and we'll talk.
I love the idea, ladies first. Thank you so much, Kevin. Thank you. First of all, we're very excited. We'd like to thank the Philadelphia Free Library for allowing us to host this unique opportunity. And what we're interested in doing is provide some very substantive information to the community. We feel that between our credit and also real estate expertise, we will be able to provide you with some very, very knowledgeable information that you can use not just for yourselves, but we want you to share it with your friends and your family. So today's segment is going to be pre-qualification. Please realize that this workshop is deemed to be reliable, information is accurate, but we realize that everyone's circumstance is very different. So because everyone's situation and circumstances are different, it's not a one-size-fits-all situation, okay? So, tell you a little bit about myself, just a little bit, if I could just do this. I am a licensed real estate broker here in the state of Pennsylvania and also in New York. Been a broker now for 19 years, and have to say, real estate is my passion. I enjoy helping people to learn as much as they possibly can about real estate. I am also an alumni with my buddy Kevin of the Goldman Sachs 10,000 KSB program, and we also have our minority certification, and I am also a licensed mortgage originator with the East Coast Mortgage and Financial Company. So I can help you with your finances, I can help you with your real estate, and we are our IRS designated office. So with all that being said, you're going to hear a combination of real estate, mortgage, tax information, all combined. It's all the same family. And so therefore, hopefully this information will be of some benefit to you. For those of you who have bought homes before, you may not be, let's say, you're not a first-time home buyer, but maybe you want to do investment, this information still could be of use to you. Okay, and if you need to contact me personally, my information is here, or if any of you care to email me or you can call me on the telephone. So, what we're going to discuss today? Well, we kept it kind of short. We said, well, let's put 3 categories, okay? So, why get pre-qualified? That's important to know. What's the difference? Because I've heard people say pre-qualified, pre-approved. Is there a difference? And then also, what's the process? Because there is a process in pre-qualification, okay? So we're going to discuss those things that's on our agenda. So we have a lot to discuss today, so let's get into our information. So, why get pre-qualified? I am a storyteller, so I'm going to tell you a true story. Young real estate agent, wanted to show some houses. Buyer calls and says, hey, listen, I saw this house I really like. I'm really excited. Can you please show me this house? Young real estate agent says, yes. Go out, show the person the house. Guess what? The buyer loved it. A real estate agent knows that look on that face when the buyer says, this is it. I want this house. Agent put the offer in, sat with the buyer, said, well, before we submit it, we put it together, before we submit it, let's see how much you can afford. The buyer could not afford the house that was shown to them that they fell in love with. Now, we're all friends. That agent was me. I can't even tell you how disappointed I was when I found out that the buyer, after seeing this house, could not afford the house that they was looking at. And needless to say, I've never done that again. So, why get pre-qualified? To avoid circumstances and situations like that. Okay? Now I'm gonna explain something to you. When we talk about affordability, it wasn't that the house was too small. It wasn't that the house was too big. What was it? What was it that allowed that buyer not to be able to qualify? People oftentimes says to me, Abby, I want a house that has a big yard, 4 bedrooms, and this and that, and they give you all these things that they want, and yet never ever say anything about what they financially can afford. Now I will say this, looking at these 2 houses here, it's very possible that this one can cost more than this one. Did you know that? So it's not necessarily size that dictates whether a person is financially able to afford a property. So let's look a little further. What we have to consider is pity. Yes, it is a pity that you have to pay this. Okay, so pity is an acronym that stands for principal, interest, taxes, and insurance. Now, if we were to demonstrate, we have to think about the fact that when you're buying a house, if in fact your house is $100,000, and we're going to use this illustration in a few minutes, I want you to think about certain things that really factors in this pity. Now let's say it again: principal, taxes, interest, taxes, and insurance. Now there's 2 insurances. There's homeowners insurance, right, Ms. Sylvia? Yep. You got possibly mortgage insurance. So insurance is insurance. So when you're paying your mortgage payment, you're actually paying 4 or 5 things all at one time. That's a lot to do. So when someone says, Abby, I don't want to spend more than $1,200 for my mortgage, what Abby is doing is thinking about 4 things that's going to equal that one payment. Okay? So let's use this as an example. I'm sorry. What I did was I took a situation where, just easy numbers. Someone says, I want to buy this house at $100,000. Now today's market, $100,000 is extraordinarily unreal, is rare. You're not going to find most decent properties $100,000, but we're just using it for illustrative purposes. So let's just say the monthly payment, principal and interest, is $1,450 a month. You say, okay, I can pay $1,450 a month. Let's just say the real estate taxes are $1,400 a year. Then you and I know $1,400 a year for real estate taxes is cheap. You just have a reassessment done. However, and let's just say mortgage insurance is $720 a year. So when we take this number and we divide the principal, the interest, and the taxes, and we can go over in more detail later on how that's all done. But primarily what we're going to do is talk about the interest, because you're going to take this $1,400 a year and you're going to divide it by 12. Let's give you how much of that you're paying on interest. That is what's going into your mortgage company's pockets. Whatever bank you pay your mortgage to. It's $120, you do the same thing. You take your taxes, your insurance, you're going to divide that up by 12. And then your total payment is not $1,450. Your total payment for that house is $1,701.68. So you might have said, I can afford $1,400, but the question is, can you afford $1,700? That's why pre-qualification is so important. Pre-qualification allows us to be able to factor in the taxes, the insurance, everything within your current set of circumstances, because that is very essential, because we do not want anyone to lose their house. So these are some things we all need to consider. What kind of debt do you have? Debt. Now, for those of you who have student loans, we will factor in at least 1% of your student loan in your debt. We don't want to hear that you have deferment, Because deferment is temporary. Those colleges, or they want the payment back. They want you to pay them back. So we want to factor in, if you have $500,000 worth of debt, we want to factor in at least 1% of that. If you have any debt, whether it's student loans, IRS, I don't know what your debt is, we want to factor it in because it has to be paid. So we want to look at your income. You might say, well, you know, I work under the table. I don't really, we only factor income that's verifiable. If you're not paying your taxes or filing your taxes, do it right away. Start doing it right away. Because you're only hurting yourself when you don't do that. Because we can only use income that is verifiable. W-2 income, 1099 income, that's the kind of income. So it's okay for you to be self-employed. You can be self-employed. Down payment, not going to talk a lot about that because my friend Kevin's going to help you with that. But that's something we all have to take in consideration. How much other money you personally have to put towards the purchase. Credit score, yes. Credit score is very essential in getting pre-approved because, let's face it, I have very bad eyes. I pay more money for my glasses because my eyes are so bad. I pay more money for my glasses because I have to wear bifocals, transitions, and whatever else I might need. Where a single person with single vision, their glasses $29.95. My glasses are not going to be $29.95. Same thing with credit. Credit down here, your interest rate is going to be higher. The bank considers you higher risk. Your credit is up here, the bank says, okay, we'll give you a lower credit score. So let's just face it, the worse you look to the mortgage company, the higher your rate's going to be. And when your rate is higher, then your payment's going to be higher. Location. Location, you say to yourself, well, how does location factor in with my pre-qualification? Isn't that discriminatory? No. Do you know that your real estate taxes could be $1,000 here in Philadelphia? The same square footage home, let's take it across the border to Delaware County, $4,000 a year. So we already, as we did in our math earlier, divide that by 12, you could pay over nearly $300 or $400 a month just on real estate taxes. So the location of the property that you purchase is going to have a great effect on your pre-qualification. So our next point is, what's the difference between pre-qualified and pre-approved? I heard people say, I've been pre-approved. No, you haven't. I have. This is the paper I have. The bank gave me this. I am pre-approved. Okay. Let's see. What's the difference? On one hand, when you're pre-qualified, we may or may not pull your credit. I say may or may not because you might be the type of person that says, my credit score is 620. I check Credit Karma and all those other little sites. Now let me tell you something. There's 3 credit bureaus that we use, and we use the middle score. So if you don't have all 3 of your credit scores, then guess what? You are not pre-approved. You're pre-approved, your credit was pulled. All 3 repositories, all of them were pulled. Pre-qualification. You could say, I make $60,000 a year. Guess what? We'll take your word for it. You put it down on the application, $60,000 a year. That's pre-qualified. I take your word for it. Pre-approved, we will verify your income. I want to see your pay stubs. I want to see anything that shows that you are earning this $60,000 a year. W-2s, all of that. Okay, pre-qualified might not cost you anything. After all, we didn't pull your credit. So, might not cost you anything. But guess what? Pre-approved, you're going to pay what's called application fee. That application fee is going to cover the appraisal of the property. And so therefore, we know now appraisal is about $500 or up. So guess what? You tell me you got pre-approved, the first thing I'm going to ask you was, how much was your appraisal? Then I know you wasn't pre-approved. We're going to be, it's very preliminary. preliminary, so preliminary that it doesn't make the buyer feel obligated in any way to be, to feel as if, they can just walk away. There's no real dedication between the consumer and the professional when you're being pre-qualified. Pre-approved, you're more seriously invested. You done paid for an appraisal, you done hired a real estate agent, have a buyer's agent or something of that sort, right? So a pre-approved person is a person that's going to be like, look, I want to buy a house now. This is something I want to do right now. I know I need to buy a house. A pre-qualified person might say, maybe 6 months. I just kind of want to see what direction I'm headed in. So it's no real seriousness there. And last but not least, if you're pre-qualified, you put an offer in, you're very likely not to get the house. Because the buyer, the seller look at it, and the buyer looks at the buyer's pre-approval and says, it's not the work the paper is written. It just says that you can afford this. Here, you have a great chance of winning a bid. You have something that went through what's called desktop underwriting. And desktop underwriting is something that once we pull the credit, once we verify your income, W-2s, bank statements, all those things, goes into a desktop underwriting system, which has an algorithm that puts it all together, that tells us at the end, this is the maximum amount that you can afford. So, is it wrong to be pre-qualified? No. It's not a bad thing. It might be right for you. Should you aim to be pre-approved? Certainly. If you definitely know that this is something you want to do in the short run. I love seeing how you all are very attentive. I love it. But just know the fact that a lot of people always use the two together. I'm pre-approved. I'm pre-qualified. If you're pre-qualified, that's more accurate if you have not done these things. So, as we conclude, we need to ask ourselves, well, you mentioned all these wonderful things about being pre-approved. Why should I get pre-qualified? Well, let's just go straight to being pre-approved. That's a good question, right? Yeah, I think it's a good question too. Well, it's kind of like, I'm a mother of two. Both of my kids, they all progress at different stages, but when they started walking, one seemed like they just got up and started walking. Other one, okay, we can try to work this out, baby, we're working out. Different growth process, but they both walking, right? So it's the same thing with the pre-qualification process. Just because pre-approval is more ideal doesn't necessarily mean that that's the right thing you should do. You might be in the pre-qualification phase. So let's see what we can do. So, our buddy, Kevin, from Premisien Credit, highlights on his workshops the importance of keeping a good credit. We know and we have seen what a credit report, the effects it has on home ownership. We have to get our credit reports. It's so many people who have not seen their credit report. Go to annualcreditreport.com, get a free credit report, find out what's on there. You would be surprised of things like John Wanamaker. That store been out of business for years. What are some of these old cell phone companies? They're on your credit reports. Get rid of this stuff. We have to take ownership, get copies of our credit report, and look for things that are delinquent, look for things that have discrepancy, look for anything that should not be there, because after 7 years, we can ask them for them to take it off, and you will be surprised just what a difference it can make in your pre-qualification process. Gather your documents. Some people, this is not to say, I'm not against paper. I really am. I'm not against paper. I'm an old person too. I love paper. But some people, when they get their taxes done, they throw it away. Bank statements, throw it away. They don't want paper. I get it. But do you realize that needing your pay stubs, your W-2s, your tax returns, your bank statements, all these things is important for you to hold on for a little while because it tells a story about you. I was looking in my dad's papers not too long ago, helping him organize things, and I saw a pay stub of his that says $6.50 an hour. He worked 40 hours, and this is for the quartermasters. And I said to myself, wow, is that what they live off of back then? Then, as I go along, 2 or 3 years later, pay stub, $6.75 an hour, same amount of, I said, wow, the government wasn't really paying him any money, and he lived off of that. Well, it's the same way with you. If you keep your pay stubs, your W-2s, your tax returns at least for 5 to 7 years, you'll find out a lot about yourself and your abilities and what you're going to be able to live off of. So when we do the pre-qualification process, if you're used to being paying $1,000 a month, you might find that that's the max we should go for, $1,000 a month. You might find that, wait a minute, I used to live off of less, and I think I still can live off of less. You know what, maybe we can try to do a mortgage for like $1,400 a month. I think I could do that. Whatever the case might be, we're going to factor in all these things. We're going to factor in your daycare costs. Some people pay for daycare. There's no way of seeing that on your credit report. There's other expenses, gym memberships. There's other things that you pay for that all has to be. We want your lifestyle to still be the same. So this information here, save it, get it together. Just take some time out and get these things. And we're going to give you handouts so that you'll be able to know what documents you each will need to save, look for, and so that you can have it for the pre-qualification process. If you are a business owner, we need your business returns. Whether you do a Schedule C or whether you also have a 1065. You need to have whatever your business returns, and it has to be for at least 2 years. So, when you talk with a mortgage lender, you have to have that conversation. Be honest, be transparent. The mortgage lender wants a loan. Just remember that. Mortgage companies cannot make money unless they give you a loan. Banks, on the other hand, can make money. They got credit cards, they got ATM fees, they got car loans, student loans. They have a whole plethora of ways of revenue streams to get money. Mortgage companies don't. So mortgage companies is always my preferred place to go when it comes to getting pre-qualified or getting a loan, because they're going to make sure you get a loan. So being honest with them, yes, I paid something late. Yes, I have a charge off. Yes, I have a collections. We're going to see most of this information anyway on your credit report. So the more honest you are about what's going on in your life, the lender will be able to say, okay, well, let's work it out this way. Let's work around that way. Because they want you to get this loan. Cash on hand. Mattress money. I get it. Nobody trusts the banks. Nobody wants to put their money in the bank. Don't make major or big deposits in your bank account, please, when you're trying to get pre-qualified for a loan. But put it this way. Put it in there. Okay, put it in the bank, and let's just wait. We want seasoned funds. We want the money to have been in your account so that when we get 2 months bank statements, it's always already been there. Don't come and say, I got $10,000 and I'm scared to put in the bank and I want to put this on my house. No, we cannot use it. It's not verifiable income. So, you have some money on hand, talk with your real estate agent or professionals to how to go about getting that money so that it can be money that's counted. You can get gift money from family and friends. You're allowed to do that. But all these types of things are things that we have to factor in when we're pre-qualifying. We look at your gross monthly income, and then again, as we discussed earlier, your current monthly expenses. All of these things are important. We don't want you to buy a house and be house poor. Yes?
So I see where you said like work history over the how does that affect?
Well, that's a very good question. And the question was, because of COVID, there's been people who've been out of work for several amounts of months, and does that affect your ability to get a loan? Unfortunately, it does. What happens is, we use that 2-year period to see what your income is. It's a projection. We also use it to project the next 2 years. The bank is giving you a 30-year loan. It's noted by the banks that what has happened in the past 2 years, I'm very sorry for many people who have lost loved ones, lost their jobs, all those types of things. The banks understand that, but they don't bend on their rules and regulations. So if a person have adversely been affected by that, you have to wait another year. Unfortunately, that's just the way it has been with the banks right now, because there are some businesses that do the opposite, that thrive as a result of the pandemic. So is it fair to give them a mortgage because they made more money, and then also those who made less to penalize them? No. So what they do is just let everything, their procedures go the same way it's always been. So if you've been out of work for a year, put down you've been out of work for a year, you still factor in the type of work that you've done, like you're still in the same line of work, but you made less money, then my recommendation would be just wait till you file another year's tax return. So it doesn't necessarily mean that you have to work the whole year. You can file, in this case, you provide 2021 tax return for 2022. So 2020 was the pandemic, so now it really wouldn't factor in anymore, hopefully anyway. That answers your question. Very good question. So we need to start saving early, because down payment, which Kevin's going to talk to us about, is a very big factor in the whole pre-approval process, pre-qualification process, because the bank's going to uphold their end of the deal. They want you to uphold yours. Your part, 3% down, 5% down, 10% down, is very small relative to what the bank is going to invest in you. So there are programs out there, but they want to see you invest your money into the house. It's going to be your house. So if you know you want to buy a house, start getting a little piggy bank, a little jar. Put your change in there. My grandfather used to have a container this big full of pennies. My aunt has one still. Can't lift the thing up. just start putting it in there. It's towards your down payment. The down payment does not necessarily have to be a ginormous amount. It's usually on an average between 3 and 5%. And then you also want to save for your closing costs. That's going to be one of our future segments where we discuss our closing costs. But just remember, when you're buying a house, Sylvia, you can know this, you're not just paying for the house, you're paying for the house and the expenses associated with buying the house. That's what closing costs is. And if you want to get into a down payment assistance program, start now. It takes months to get into those programs, and sometimes it takes months to finish. So if it's a hot market, real estate market, you'll never really get the house that you really want if you still feel like you have to go through a down payment assistance program. Go through it now, when that way you'll be done by the time you're ready to start looking for a property. So if we think about our resources, all the information that we discussed today, it could be a lot. Our office is here to help you. We have some very knowledgeable agents. We also have Premisien credits, which if you know that you need help with your credit, utilize them so that they'll be able to get you on point where you need to be so that you can come and see us. And East Coast Mortgage, if you need help with financing, and like I said, mortgage companies to me are always a best fit, because whatever your mortgage situation is, we can broker and find a mortgage company that's going to help you with your specific mortgage needs. So, on behalf of Genuine Property Solutions Real Estate, I'd like to thank you all for your attention. And if there's no further questions, I'd like to turn the floor over to my good friend, Mr. Kevin from Premisien Credit.
Sylvia, how do I follow that? She took all my material, so I'm just going to stand up here and do that. Abby, thank you for the incredible information, and we appreciate your time. I'm not going to take up a lot of your time, but I want to talk to you guys about the credit part of this pre-qualification process. And I don't have the fancy clicker that Abby has, so I'm going to ask for the assistance of my good family here. Is that okay? You guys okay? I'll just give you a nod when I need you to move forward, all right? Let me come set it up. Just give me a second. Let me come set you guys up. All right, so we are Premisien Credit Counseling. Here's our office. This is our phone number. You can find us on the web at Premisien.com. That's Premisien. Premisien.com. You can also email us at info@Premisien. All right, so we're talking about buying houses, and Abby talked to you about the pre-qualification process. And so, Shavonda, I want to talk to you about how to get your credit in a place that allows you to be pre-approved, right? We want to be pre-approved. Right. Pre-qualified, we may not need to see that credit, right? But pre-approved, right? That's what you told me. I need to be pre-approved. That's it. So if I'm going to get pre-approved, that means they're going to pull my credit. Am I right? Right. When I go off track, if I say something wrong, you let me know. Sean, you going to let me? Okay. All right. So if you give me so we're going to talk about credit, but I want to give a few statistics real quick about credit so you understand what this means. Now, I don't come to give information that is divisive. I always talk about credit, and credit is equal opportunity, right, Siobhan? It doesn't discriminate. And so credit doesn't discriminate. You got bad credit, doesn't care what race you are, doesn't care what gender you are, doesn't care where you live. But I want to let you guys know and be aware that there are some statistics that impact different groups of people differently, right? So nearly 23% of Americans have credit scores less than 600. Now, in the home buying process, Abby, when we're looking at mortgages, we really want people to be in the 620 to 640 range, right?
That's right.
At minimum. At minimum, right? 23%, almost 1/4 of the population, when polled, has a credit score that's less than 600. So 1/4 of the population of people who can qualify for a mortgage, as far as age is concerned, as far as financial status is concerned, have scores that will not let them get qualified, or certainly will be challenging for them to get qualified for a mortgage. However, the average FICO score is 714. Vantage score 688. These are two of the financial scoring models. Here's where I talk to. Again, this is not divisiveness, but here's where I talk to groups of people, because it's important to know where you are. Think about what we're saying here. The average score for the Asian population in the United States is 745. For the white population, 734, but for blacks, it's 677, right? We are 60 points lower, on average, than the next population of people, which means that there are a lot of people in our population who are not being qualified for mortgages. And we know that 70% of the wealth in this country came from home ownership in some way, shape, form, or fashion. So we want to get our people into homes, all right? Here's one of the problems. Abby, you said when you're trying to go for a mortgage, right? You're trying to get into a house, you're trying to get pre-approved or pre-qualified. You started pre-qualification, so let's start there. You said, pull your credit report. 74% of people who were polled in this country do not know the factors that affect their credit scores. Now, Amber, we've talked before, so this is a quiz for you. You didn't know I was going to give you a quiz, but here it is, right? Amber, what are the 5 factors that affect your credit score?
Payment history.
Talk to me now.
Utilization. Payment history.
You said that already? Got that? I heard you.
What?
Credit mix.
Credit mix? Okay, come on. Siobhan's going to help you. She's a helper.
And
Credit age. and inquiries. All right, so the 5 factors that affect your credit score. Now, 74%. Now, that's 1, 2, 3, 4. So, in this room, let's count. I'll just count you 5, right? Of the 5 of you in here, 4 of you would not know this. If we're looking at the statistics, right? So, the 5 factors that affect your credit score, and there are 7 factors that affect your credit profile. And as we go through these seminars, by the way, we're going to do these every second Friday of every month. Today I'm going to be talking about payment history. But as we go through these conversations, you'll know all of those things that impact your credit profile. But the 5 factors that affect your scores: payment history, credit utilization, credit age, inquiries, and credit mix. And they are I gave them in order of importance, and we'll talk about that in just a minute. Most people don't know that. And not knowing that is what is keeping people out of the home buying process. All right? Here's a thing that's alarming, and this statistic is growing. 30 to 40% of employers polled use credit scores to determine employability. That means if you're applying for a job, they say, I'm going to ask you to apply for a job and work with me because I know I need you as a resource. But if you apply with me, I'm going to pull your credit report. Okay. I need to pull your credit report because I need to determine whether or not you are a reliable employee. Right? Now, Rashana, let me say this to you. I'm going to get in trouble for this, but I don't care. I don't care. John, I said that I'm going to pull your credit because it determines whether or not you're a reliable employee, right? That's not true. Why are employers pulling credit? To see what you scored. They want to see your score. But why do they want to see your score?
If it's too low, they figure you won't be a good employee.
They think you won't be a good employee. And Sylvia, I have to apologize. Will you accept my apology? I baited you into that question. You answered the question exactly as I thought you were going to, but I baited you into the question. I did. I didn't do it facetiously, and I didn't mean to be malicious. The reason that employers pull credit is not because it helps determine the reliability of an employee. Statistics show that a person with a low score is no less reliable than a person with a high score. The reason that employers are using credit reports to determine employability is because employers cannot discriminate based on race, color, creed, religion, sexual orientation, but they can discriminate based on credit scores. So now I'm going to go from here back up to here. Remember what I said? Average for Asians, 745. Average for whites, 740. I'm sorry, 734, but the average for blacks, 677. So that means that you know that if the average is much lower, then of course their low scores are lower, right? That means they are keeping these marginalized Latina and African American employees out of the job market. And that's how they're doing it. So, we all need to be aware of this. Credit scores are keeping us from home ownership and jobs. And jobs are what we use to get the money to get the homes, right? That's why we're not amassing wealth. Can I get an
Amen?
Amen. All right. Let's go to the next one. All right. So now, credit scores, how they affect your mortgage. So Abby alluded to this. And we're going to talk about this. This is based on a $200,000 mortgage some time ago when interest rates were much higher. But this is all relative, right? If you have a $200,000 mortgage and you have a 720 credit score, it's not going to cost you any extra money. If you have a 700 to 719, it'll cost you an additional $7,000. So you see the difference between a 700 and a 720, an additional $7,000. But look down here, right? Look down here where we are as African Americans, right? We're right about here, but let's go here. If a person has, now remember I told you guys, remember I told you there was a difference, right? The average score in the Asian community is up here. The average score in the white community is up here. But the average score in the black community is here. We are paying $30,000 more. How are you, my friend?
How you doing?
Good.
Good.
We are paying $30,000 more over 30 years. By the way, this is over 30 years, right? This is over 30 years. Over 30 years, we are paying $30,000 more for this same $200,000 house than somebody in this credit score range, right? That $30,000, just think about this, over 30 years, right? So let's say I buy a house when I'm 20 and age 50, I go to pay that mortgage off, right? Now, when I'm 20, I have no children, right? I'm living good, I'm riding motorcycles, I'm skiing, I'm doing all the things that I like to do. I roller skate regularly, still roller skate regularly, right?
Yes, I
right?
do.
All right, so now I have when I turn age 30, I have a daughter, beautiful daughter. I actually have two beautiful daughters. When my daughters turn 20, which is when I turn 50, my daughters are now going to be looking at home ownership, right? If I had a 720 credit score when I bought this house, I saved enough money to give them the... See how we pass wealth along through home ownership?
Mm-hmm.
I just paid for my daughter's down payment on her asset, right? Now, she's got student loans. They kill both of us, but we won't talk about that. So the difference between the average credit scores is the difference between wealth and non-wealth. That's why the wealth gap is so deep. All right, and can I get a? Yes. All right. So now we talked about the 5 factors that affect your credit score. Remember we said people didn't know what they were. Remember we said what they cost us. Well, now you can see these 5 factors that impact your credit score. And not only do they impact your credit score, Rashawn, but they impact it with a percentage. They are weighted. Right? Payment history weighs the heaviest on your credit. How well you pay your bills. Now, I know you guys pay your bills well, so I don't have to worry about this. I'm not talking to you. I'm talking to the audience. I'm talking to the other audience. Right? But if you miss a payment, that is going to impact you greater than if you get inquiries. Inquiries will certainly impact your credit, but missing a payment or making a late payment is going to impact you at a much greater rate than anything else on here, right? Then comes credit utilization, and that's the amount of outstanding balances on your credit cards versus the limits. Then there is the length of credit history, that right there. When we get to that session right there, I'm gonna go off, but I'll wait till we get there. Then there's new credit. New credit is inquiry. Those are inquiries. 10%, and then credit mix is another 10%. Today we're going to talk about this one right here, payment history, and we're going to get into some details about how it impacts you and what you can do if you've been impacted negatively. So if I can go ahead on that, you guys good? You guys good? Questions, concerns, issues, commentary?
Why, when they do an inquiry, why does that affect your score?
Why, when they do an inquiry?
Yes.
Because do you want the philosophical answer or do you want the surface level answer? Let me give you the philosophical answer. All right. Let's talk about why the credit scoring system was created. All right. I'm gonna give you a little history lesson. Is that all right? All right. So back in 1950s and before, when a person wanted credit, so the credit system as you know it was created many years ago, but what you know it is right about 1947, right? But in the 1950s, when a person wanted credit, the bank would ask them to give references. That's when banks did community work, right? So they would come in and ask for a reference. They would say to you, give me 3 references. Give me 3 people who would say to you that it's okay for us to give you this money. Right? They would let you bring those references into the bank. Now, they would contact those references however they were doing it, via phone, or they come to the person's house, right? But if the person says you are trustworthy and they believe that you're going to pay back, the bank would give you a loan. The problem with that is you could say anything and you can get anybody to say anything, right? I have an uncle. I put my uncle down, hey, Unc, the bank is going to call you. When they call you, I want you to tell them that I am a trustworthy individual. Now, you know I just borrowed $100 from you a year ago, and you ain't seen one dime of it, right? Right? You know that. But you my uncle. So I want you to tell them that they can lend me $100,000. You lent me 100, I didn't give it back to you, but I'm gonna give them 100,000, right? That didn't work. Or it worked for a time, and then they said, we've got to come up with a better measure because too many people are defaulting on these loans, right? So they talked to Congress, the banking industry talked to Congress. Congress then commissioned the public to bid on a contract that allowed them to come up with a measuring mechanism for credit. And a for-profit entity was created. Do y'all know what that for-profit entity is called? Now, I want y'all to hear what I'm saying. It's a for-profit entity. You know what it's called? I can't hear you.
I said,
FICA.
Talk to me now. That for-profit entity. Deshaun, did you hear what I said? I said for, not the number four, for-profit entity. It's called FICO. That for-profit entity was born. They won the contract. They created the mechanism that measures a creditworthiness or measures the creditworthiness of an individual. And so that mechanism is the FICO scoring model. But they created, it's a for-profit entity. They created it and sold it. Who do they sell it to?
the bank.
They sell it to the banks. So FICO works for the banks. The banks are their biggest clients, right? The banking industry said, we need a mechanism to determine creditworthiness. They commission FICO. FICO makes all of their money from the banks. So banks determine how FICO works. So now, FICO says, we've got to put in mechanisms that seem fair. One of those mechanisms is how many times you apply for credit. Those are inquiries. How many times does this person apply for credit? Because they believe that a person that applies for too much credit must not be paying credit back well. They must be leveraging debt to live their lives. And that's problematic. But is it really fair? I don't know. That's philosophically for someone else to determine. You okay with that?
Yes.
Are you mad at that though?
No, I ain't mad.
You're not mad? Oh,
No.
then I didn't do my job. I came to make people mad. I came to make people angry. That's what I came to. So I didn't do what I was supposed to do. I didn't do what I was supposed to do. So I'll tell you what I will do though. When we get to the credit age component, like I said, then I'm gonna make it. But anyway, the truth of the matter is they believe it's one of the factors that can help them determine whether or not you are leveraging too much debt. All right. And is that a raise your hand or you stretch?
Stretch it.
Okay. All right.
Taking it
Me
all
too.
in.
All right, so let's talk about the payment history factor on your credit score, the one that impacts your credit score the most. Okay? If you make a miss, or if you miss a payment on your credit, you could lose. I've seen people lose 60 points in their credit score. Yeah, easily. And it can take you 24 months, 2 years. That's 2 years if you count. That's 2 years. I know if you count one and 12 years, 12 months in a year times 2, that's 24 months. It can take, you have to pay back that same account 24 months in a row on time or early. And early doesn't get you any extra points. But you have to pay that bill back 24 months straight to negate the effects of this 50-point drop, or to get those 50 points back. All right? So pay your bills on time, people. Pay your bills on time. Lenders don't want to see late or missed payments, but they definitely don't want to see them within a 24-month period. Now, if you're having a 36, Michelle, things happen. Things happen to me. I was young. I made some mistakes. I went to Miami. I shouldn't have. Okay? But lenders don't want to see any late or missed payments within the last 24 months. So as long as you have that be the case, you're okay. Here's the deal. This is important. The more late or missed payments you have with a lender, the more difficult it is to get late or missed payment forgiveness. Now, you can get late or missed payments forgiven. It's difficult, but not impossible. Can you take me one step further? Okay? So now, let's say, Rashana, you didn't do this. I'm just using you for emphasis. I know this is not you. I'm just using you for emphasis. Right? So let's say, Rashana, you had a car. Silver, Lexus, I feel like you have a Lexus SUV.
Yeah.
I feel like that Lexus SUV is silver with the crushed gray interior. It's nice too, boy. That thing's very nice. It has an analog clock. For whatever reason, everything on the dashboard is digital except the clock. Clock is analog, but that's for elegance, right? So you have this beautiful Lexus SUV, and when the pandemic first hit, you were scrambling just like everyone else was. And so in December of 2021, you missed the payment. Things just got missed. You were coming out of the pandemic, but you were still scrambling. You missed the payment, right? Let me not talk that into existence. Someone missed the payment. Someone you know missed the payment, right? Now, you only missed the one. There is a way to get that late or missed payment removed. It is accurate information, so let me dispel the myth. There are a lot of people on social media, Sylvia, who are talking about credit, and they're saying they got these hacks. We can do these things and get late payments removed. That's not true. Okay? Or let me not say it's not 100% true. They're not giving you the entire truth about that, right? So please don't go in and try to defraud the credit bureaus by saying, I didn't make this missed payment or late payment, or this was not me, or the creditor has the wrong address. The deal is, the only way to get a late payment removed, the best way is to, one, admit that you made the missed payment, or you missed the payment, right? Write a letter. First step, write a letter to that company. Please write a letter. Don't try to jump this step. Shavonda, don't try to jump this step, okay? Write a letter. It's called a goodwill letter to the creditor. Write that letter, and on the letter, put the late payment date. You put in the letter, and I'm going to show you guys an example of a late payment letter in just a minute. But include the date or dates that you missed the payment. Hey, I am aware that I missed this payment. Give a compelling reason for missing that payment. That is the most compelling reason. Hey, this pandemic drove me insane. I had to get out of the house. I took a vacation. I stayed on that vacation for 60 days. While I was on that vacation, I didn't pay no bills. I didn't even pay for the food I ate. I dined and dashed. Don't tell me about it. But don't say that. But I give them a compelling reason for missing the late payment. I had my bills got behind because I was caring for an ailing family member, right? If you can provide supporting documentation, that is the greatest way to get forgiveness. I was caring for an ailing family member, and here is the medical bill or the medical chart. Don't give the information, but here's some medical documentation that supports that ailing person. Amber, this is the thing that drives me insane, right? When I'm working with clients. Sometimes I will call the companies with my clients to help them get these things removed because I know how to have the conversations. Now, they missed the payment, right? They actually missed the payment. They didn't make the payment, right? They get on the phone with the customer service rep and they want to be belligerent. That's a good word, right? Y'all like the word belligerent? Y'all heard me say that big word, belligerent? Right? They want to be belligerent about missing the payment. The person says, well, how can I help you? Well, I missed this payment. Can you remove it? Well, no, we can't do that. As much money as I've given you over the...
Oh,
You want to be polite as possible because this is a goodwill letter. Y'all see that? It's in quote. It's a goodwill letter, meaning you are asking them to do you a favor. They have no legal obligation to do this. They have no policy obligation to do this. They can do it though, but you have to be polite. When you write that letter, be polite as possible. Please, I'm asking you for forgiveness for this. Please do this goodwill for me. And when you finish that letter, send it certified mail and keep the certified mail receipt. The certified mail receipt is what you're going to use if indeed they don't respond or they don't respond in a timely fashion, or you need to prove to them that you sent them this letter, right? Send the letter off. And then 2 weeks later, call them, right? When you call them, let them know, hey, I sent you guys a letter. I sent it certified. Make sure you document all conversations. But we're trying to ask as many people as you can do to give forgiveness. Because what happens, Amber, is you'll get on the phone with the representative and the representative will say, oh, no, we don't do that. Now, they don't have to do that. Most people at the companies, particularly the people who are going to answer the phone first, may not even know that they can do it. Many of them don't know that you can remove any negative off your credit report by using what's called a universal data form, but the company has to submit it. Shauna, you want to say something?
Should you make the payment first and then write the letter, or do it simultaneously, or wait until after you get an answer?
Somebody sent you in here as a
Oh,
mystery
yeah.
shopper. That's the
a mystery shop. Oh my God, I ain't heard that in a long time.
You see, I used to work in retail. I can tell you.
That's what I'm saying.
You
Mystery.
can tell I used to work in retail long time ago. So that's a great question. Should you make that missed payment? Absolutely. Please don't try this if you're still late, right? If you're still missing, right? You're 90 days late on that payment. You try to call them to ask for forgiveness. They say, yeah, we'll forgive you for the first 30 days, but these other 60 days, no, absolutely. Make the payment first, bring your account up to date and current, and then send the letter, and then give them a call. Say, I sent you a letter, the date on the letter. If you need me to email you a copy of the certified receipt, I can do that. Ask as many people as you can. If the first person tells you no, politely, if the first person tells you no, you've been absolutely wonderful to me. I'm going to ask if you could pass me along to your manager or supervisor. I just want to confirm, because they may not know. When you get to the supervisor, if the supervisor says no, say, is it because you don't do it, or is it because you're not willing to do it? And if they tell you we don't do it, you've been so kind, would you pass me along to the president of the company? Document every one of those conversations, because you may have to have several and you may have to call back another time. But document, I spoke to this rep at this time, this is what they, on this day, this is what they said. When you call back the next time, I spoke to Karen, Karen told me, but I'm asking, all right? Document the conversation. Now, oh, I like this. Talk.
How do you document a conversation? You're on the phone and you have a Word document and you're transcripting everybody. Okay.
That's how you do it. I know there are some apps that will allow you to record your conversations, but that is illegal. Please do not do that. You can record the conversation, but before you start the conversation, you have to let the person know this call is being recorded, and they'll probably hang up on you. So they record your conversation. By the way, the recorded conversations are their property. They have custodianship. Don't ever try to get it. They will never get it to you.
I was going to ask you that. As if they have reference numbers that you can say, can I have a reference number to this conversation?
You can ask for a reference number. You can ask for the ID of come on in. You can ask for the ID of the person you're speaking with, but if you try to subpoena the recorded conversation, and they come on, they say this is you're on a recorded line, they can use it for court. You can't, right? Doesn't belong to you, it belongs to them. You can record, but you have to mention, but I would not try it because that's the surefire way for them to deny you. Because they have your phone call recorded, they're gonna hear you say, I'm recording you. That's when they're gonna say, absolutely not, we're not gonna forgive you. So, don't record it, but just write down who you spoke to. Put it on a Word document. All right? So now, you're gonna write a goodwill letter. Don't write the words. You can put in the letter goodwill, but I'm gonna show you the mechanics of the letter in just a minute. You can put in the letter goodwill, but write the letter first, send it certified, and then call 2 weeks later, have the conversation. Was there another question on deck? No? All right, take me forward. Thank you so much. Here's, it's small like me, but impactful like me. All right? Here is a sample letter, and I'm gonna go through it for those of you who can't see it. Here's a sample letter that you can write to the creditors. Obviously, you're gonna have your information up here. Very important. Put a phone number and the last 4 of your social. Don't put your full social, please. Please don't put your full social. But put the last 4 of your social. The reason you're putting the last 4 of your social is because you might get the account number wrong, or you might not have the account number at all. This is the way for them to identify you. So they're gonna look at your name, your address, your phone number, and the last 4 of your social to make sure they match before they give you the information. All right? Make sure you put that information so they can easily identify the account. All right? You put the creditor's name, creditor's address. This part right here, this says current date. Very important that you have this on the document, because when you say to somebody, I sent a letter on this date, you need to have documentation, because they may ask you to send us the letter that you sent. So they want to see the date. All right, the account number, if you know it. I wouldn't put your full account number, particularly if it's a credit card. I would put partial, but I'd put at least 12 digits if it's a credit card. All right, to whom it may concern. And then you start off very politely. And here's the deal. This is the thing I love. What's your name?
Angela.
Angela? I'm Kevin.
Nice to meet you.
That's what my mother named me when I was born. All right? So I believe her. All right? So Angela, from the root word angel, got it. So Angela, when you're starting your letter off, what you want to do is you want to make the company understand that all companies can do goodwill forgiveness. They have the power to do this. Mm-hmm. And how you do that is you tell them that you were advised to write you by your customer service department concerning my credit rating. Mm-hmm. Now, is this a lie that Abby, is this a lie that they advised to write the customer service department?
Not at all.
You know why?
So
Because when you apply for this credit, they're going to give you a customer service number and address, right? That is the advice. They say whenever you have an issue, call customer service. So they did advise you to call. I was advised to write you by your customer service department, concerning my credit rating with your company. I have enjoyed a credit account with your company. I've enjoyed it. You guys have been so wonderful to me. See what you've done? You've blown a little smoke. There's a little smoke, right? I have enjoyed a credit account with company for many years. I may change this, put their name in there so they see you, and put in, instead of for many years, the amount of time that you've had the credit. I have enjoyed this credit for 3.5 years, okay? Let's see. During the course of our business association, I've honored and respected my account agreement to the fullest. I have. I paid you on time, right? You got my money, right? I didn't abuse you, right? I appreciate how wonderful your service has been. You've been very nice, right? So now they know that they feel like, okay, I'm not being attacked, right? Now we go into what we need. Unfortunately, put the amount of time that has passed since you missed the payment. I was in financial dilemma due to, and put what actually happened. And put specifics, not COVID, not due to COVID, due to a COVID-related illness with my sister, my mother, okay, or father. I'm not gender discriminating, guys. All right, new baby, etc. As a result, maybe you missed 3 payments. As a result, 3 of my payments to you were delayed. Because your account with me is extremely important, I managed to borrow the money to cover the payment, or I managed to pay the money back. And you put how much time it took you to pay them. I paid all 3 of those payments over the course of a 9-month period, or 3-month period, or 2-month period. However long it took you to make those payments. And you want this to be as accurate as possible, right? Because then they understand that you are monitoring this, and you're not just selling them wolf tickets, right? They're saying, yep, I can track this. They missed 3 payments. They missed October, November, December. And then they made the payments up in January, February, March. So 3-month period, right? But I made sure to fulfill my obligation to ensure that your company suffered no loss. There was no loss. There was nothing lost here. Shivani. You didn't lose anything, right? You got your money. You actually got late fees from me too, so be happy, right? I am thankful and appreciative for the years of positive credit history that I have obtained through your company. But now those 3 late payments are hurting my credit reports and causing me extreme stress. I'm trying to, now this is where you're letting them know that you're trying to do something. And they can empathize and sympathize, right? Now remember, guys, you're writing this letter to a human being. So we like to think of companies and people as 2 different things. There's no such thing as a company without people. Unless we're talking Amazon, they're trying to go peopleless, but that's a whole different political and philosophical conversation I'm not going to get into. The point is, companies are made of people. They're going to be people that are, now they do use filters, so it's very possible that they're going to send this letter through a filter, but at some point it's going to end up on somebody's desk and somebody's going to be reading this, and that somebody is a somebody. So that means that person may have gone through or may be going through the exact same thing. So what you want to do is appeal to that individual. I am trying to do this. I'm trying to buy a house. And it doesn't matter whether you're trying to buy a house 2 years from now, 2 months from now, 2 weeks from now. The point is, I'm trying to buy a house. Or I'm trying to get a new job. Or move up in this job. Put whatever it is that is causing you the issue in the letter so that they can connect to it emotionally. Right? This is where my goodwill request comes in. I desperately need, let's say it's a promotion, I desperately need this promotion, and I would be extremely appreciative if you would please complete a UDF, Universal Data Form. That lets the company know, doesn't matter what level you're on, that any company can enter any information they want to the credit bureaus by filling out this Universal Data Form. All companies that report to credit bureaus know what this is. And now you are letting them know that you know. I know you can do this because this form exists. I'm telling you this. So please fill it out and fax it to the credit bureaus to remove those entries. The credit bureaus told me. Right? So you say, look, I know about this form. Cat's out of the bag. I know about this form. The credit bureaus have advised me that they will report anything you tell them, but they need to have that instruction in writing. That's what they told me. I beg that you may help me and take into consideration how good a customer I have been and how long I've had an account with you. And that's important, right? You want to let them know you have a relationship with them. We've established a relationship. I am a person. I'm a human being. And we've had a great relationship. Sure, things get rocky, right? You have arguments with your relatives, your loved ones, right? You have arguments with our creditors too. So I've had a relationship with you. I want to maintain the relationship with you. Please take that into consideration. Send a letter over. Sign it, send it over. Okay? And then 2 weeks later, you make the call and you remind them that you sent that letter, ask them that they get it, and then ask them to remove late payments. That's how you get late payments removed, and it works about 70% of the time. Some people will never do it. Some companies will never do it. It is much more difficult if you have more than 2. It's much more difficult to justify if you have more than 2 with the same company. And if you have more than 3 companies that you've made mispayments with that are different times. Have you hear what I'm saying when I say different times? Now, if you have 3 credit cards and each one of them you missed the payment on at the same time because of this medical issue, right? They can understand it. But if you've got missed payments in May of 2022, and then you got another missed payment in February of 2021, and then you got it's much more difficult for them to forgive you. And by the way, they may do a credit pull on your credit. And here's the thing, this is why we know that they can use that universal data form. They may do a credit pull on your credit report to see whether you've missed payments from any other creditors. But that credit pull is going to give you what? A hard inquiry, right? But you know what they're going to do? They're going to fill out a universal data form to remove that hard inquiry because they weren't authorized to do that inquiry. Did y'all hear what I said?
Wasn't authorized.
They're not authorized because you did not authorize them to pull your credit,
Right.
right? To do a hard credit pull.
Right.
So what they're going to do it, they may. Now they may not, but they may. But they may not, but they may. Right? If they do though, if they do a hard credit pull, they're going to immediately submit a universal data form so that inquiry comes off your credit. But they actually, what they're going to enter is do not enter inquiry onto credit report.
Okay.
That's what that universal data form. That universal data form, they can do anything they want. They can put on or take off anything they want. That's payment history. That's how you fix payment history.
Why is it better to send it as a letter as opposed to an email?
Oh, that's good stuff. Good stuff.
Ooh, that's interesting.
Because you can't certify an email.
No?
They haven't thought of that yet. But,
You can't certify an email to the degree. Remember, postal mail is federal. You can't federally certify an email, even though you can encrypt it. You can put a has read receipt on it, but that's not. We haven't gotten to a digital level of federal oversight for email that will allow you to use that as certification. So they can say they never sent it. We never got that.
certified.
And they can dance you all day with that.
Yeah, they can.
And they will. But here, they don't have to get the letter for you to be able to use documentation. You just have to send it. Your responsibility is to send it. It's not my responsibility to get it,
And
but
keep a
I can
copy.
prove it.
Keep a copy of it.
Keep a copy. Yeah, you can send them a photo of the certificate, but don't send the actual copy. Send a photocopy of the certified mail receipt. All right. Any other questions, concerns, issues? You want to get pre-qualified? You need good credit. You want to get good credit? The first thing you want to fix is any negative, derogatory payment history. And that's really difficult, but not impossible. That's what you can use. So, Abby, if you don't mind, if you come back up and we can close out today's show. Did you guys enjoy? Did you have fun? I'm saying there was no clapping.
I want to know what the next one is.
So that's what we're getting ready to say. So again,
Abigail, Bridgeford, Genuine Profit Solutions Real Estate. Actually, our next segment is going to be in it's going to be the second Friday of every month. So we have a whole list of all of our segments on the Philadelphia Free Library. You can see all the lists there so that you can arrange your affairs to attend. If there are any questions that you have about what we discussed today, you can reach out to either of us individually to talk to us about your personal set of circumstances.
And this was about credit today, correct?
credit and real estate.
And real
So
estate.
every
Real
session
estate
is going to be.
Yes.
I have a
So,
question for you. I mean,
No, please
It's
ask a
fine.
question. Yeah.
okay, because I want to buy a house.
Yeah.
This year.
right.
I love it.
Yeah.
I know.
I'm
You
tired
wanna
of
buy a
paying
house?
rent.
I
My
want you-
landlord went up for my
I want
rent.
you to
was
buy a
about
house,
to-
nice.
I was about to smash, but I said, ain't her
Yeah.
fault, cost of living. But I'm interested in getting a house. And I just wanted to know the formalities and the steps that I need to take in
Oh,
order
wow,
to get that done.
okay.
So I don't know if I was to go to the bank and see if I can get a loan first. I didn't know if that was the first
Our
step.
segment that we had today on pre-qualification will provide you with some additional information before we leave today. We had that this morning, so we'll be able to help.
Oh, okay. I'm ready to move. I'm gonna start packing when I go home.
No problem, no problem at all.
We're gonna get you there.
No
We're gonna
problem
get you
at
there.
all.
So,
So we welcome any suggestions, any advice, any,
Also as well, there's another thing. I know I did this one, but I keep getting these Section 8 and HUD home things in the mail, on my email, on my phone, everything.
yeah, well, there's a lot of marketing materials that's going out
Going
because
on out,
everyone's
yeah.
being really inundated with these type of materials because the marketing or housing market is just really, really crazy right now. The rental market actually is more hectic than it is in sales market
Okay,
because many more people need to rent
right.
or are more interested in renting than buying right now actually. But what we're gonna do is we're gonna conclude our session this evening. We wanna thank everyone, whether you attended virtually or whether you attended in person, and we look forward to being able to discuss with you our next segment in the upcoming months.
and that next segment is gonna be the second Friday of February. In fact, all of the sessions are the second Friday of every month. Let me confirm the date for you guys. I think the second
Flyers, I don't have the flyers.
Friday is, the second Friday of February is February the 10th. Friday, February the 10th, from 1 p.m. to 3 p.m. here at the Free Library of Philadelphia, 201 South 40th Street, Philadelphia, PA 19143.
Got it.
It's like I work it. It's like I work it.
I know, right?
It's like I work it.
4-3 or is it 0-4?
It was 104.
4-3?
104.
Oh, I'm not even close.
That's okay.
It's in Philadelphia,
I
though.
lived in this area.
It's in Philly.
It's in Philly.
Yep.
It's absolutely free to attend. We will also be going live virtually, but we want you to come and fill the room, so please.
Yeah. Thank you all for coming.
Thank you so much for coming.
Yep.
And tell your friends and tell a friend and tell a friend.
Tell a friend.
Tell a friend and tell a friend. Okay.
Yeah, I'm gonna have to bring my folks up here, because they need help
Yeah,
with
we,
things.
I want
Tell them to come.
Yeah,
Carol?
because they need help.